Good morning, good morning, good morning, my predicted trades family. I hope everybody's doing well. Finally back on the mic for prep after this horrific stomach bug I've been dealing with. So let's dive into prep. Let's do a quick little review. This week, we kind of gave up that 4,200 and came back down into the same zone that we've been at for quite a while. Yesterday we did a great job holding the daily 50, this purple line in here, and rallying back end of day above 41.36.5. If we look at the overnight, we stayed above that 41.36.5. And we're trying to push back up to the daily 21 at 41.55, daily 15 at 41.60, daily 8 at 41.65. Each one of these levels has been interacted with so much over the last month. 41.55, 41.65 are key levels for me. And that 41.60 falls right in between, and now all of our lower time frame moving averages are just sitting at those key levels. So the question is, can we get back above those levels and push back up to 4,200? Or are we going to reject them and come back down to test 41.36.5, that daily 50 again, near 41.20? And if we were to give out that in yesterday's lows, then it would be a target down to the daily squeeze bottom, which has arrived at this 40.87, 40.71, and 40.80, right? All key levels below, just like these key levels above. We do have some economic data coming out shortly. Let me pull that up. So the big one for today is GDP and jobless claims. We do have some 10 a.m. data on home sales, and we've got a couple of Fed speakers today. And then tomorrow we have PCE, we have some income data, some durable goods, trade data, and consumer sentiment at 10 a.m. So these next 2 days we have some big data drops. They're likely going to make the market move and shake a little bit. But as long as we don't give out key levels that we've held, these could accelerate us right back up to that 4,200. So if we zoom on in, let's see, coming into open we will have a 1 hour squeeze to keep an eye on. The top of that 1 hour squeeze sits basically at the top of our key levels here and at the daily 8 at that 41.65. So if we can't get through 41.65 early, then we're rejecting that 1 hour squeeze top and can come back down to test overnight lows, that key level 41.36.5. Should that give out, back to the daily 21. Daily 8. Jeez, wow. Should 41.36.5 give out, it's back down to this daily 50. Daily 50 at 41.21 now. Yesterday it was more like 41.18, but they do step up incrementally. So if we give out 41.36.5 back to the daily 50, yesterday's low, should we give that out, then it's down to 4100 and 4108. Didn't quite get to that zone yesterday. Also, just looking at the daily over here that I usually track, I drew in a zone around that 4100 up to about 4110. And when we rallied up in April, we held that zone to push higher. We only slipped under that zone a little bit and came back up. Same thing again to tag the daily 50. Now the daily 50's caught up above that zone. So really, as long as we keep holding that zone, they're just taking profit and reloading and taking profit and reloading and setting progressively higher lows. So that zone becomes very important as long as we keep holding that up. Going into June next week, right? We could see a nice rally off of it, get through this 4,200, 4,220, where we've been topping out in an attempt to get back up higher. But we start to give out that 4,100. We're going to retest these recent lows of this flag, and should those start to give out, it'll be a trip down to the daily 200, which has slowly caught up to 4,000, sitting at 39.90 now. And I think, yeah. So, I'm not saying that this bull flag is going to fire down. I'm just trying to call out the signs to understand when it is going to fire down, if it fires down. We'll have to lose this zone. We'll have to retest these lows and give them out, and sellers will step in to bring it down an extra, 50 points to get everyone giddy to the downside, and then bounce and settle, yada yada. But we could easily just keep holding above this 4,100 and get a nice rally back, especially going into the end of the week. 2 days left here. The end of the month is next week. So they could very easily rally right on back and close the end of the month up here. If you look back at previous years, cyclically, around the beginning of June, we usually have a little selling into the quad witch, and then after that quad witch, we usually have a strong rally in summer. So we could easily rally up to end the month, have that selling to start June and reset on the contract changeover, quad witch, right? And then rally back. Just some scenarios to get ready for. Overall today, we know our key levels and our moving averages above that we need to get through to try to push higher. If we reject those, we have our moving average below, targets below to retest. Moving on, NQ. Looks quite different, compared to ES. NQ's been leading this charge to the upside. Let's see, last week it got up and was even tagging the third Keltner to the upside. And then we had our fade back. Yesterday getting below the daily 8, almost to the daily 21, daily 15. And we reversed right back up off of those NVIDIA earnings. And NQ looks almost poised to take out these recent highs and push right back up to that third Keltner, which is now above 14,000. So, on NQ today, let's see if we can stay above this 13,820, which is kind of the overnight lows and a key level. This 13,900, which we are now pushing above. So on any dips, would like to see us hold that 900, at the very worst at 820, the overnight lows, to keep trucking on up to recent high 13,980, we'll just call it. Then 14,000 psych level, got a key level at 1464, third Keltner at 14,123. So those are targets to the upside for NQ. If we're just going to rip faces off this morning, we do still have that economic data coming out. So don't be surprised if we see a reaction down, but hold overnight lows, and then when the session opens, we're ripping right back up. We never know. So those are upside targets. If we roll over and start to lose 13,820, 13,800, they will likely come back down to kind of fill the gap, and it gets a little muddled here because I've got so many darn levels. So I'm going to just turn those off for a second. If we start to lose that 13,800, daily 8, 13,773. A daily Keltner at 740. And should we start to give out 700, then it's likely back down to yesterday's lows, where the daily 15 and daily 21 have pretty much caught up at 13,600 and 13,550. Moving on. Ready. Ready made it to the top of that daily squeeze and almost back to that daily 200 on Tuesday. And then reverse right back down to these daily moving averages. We do have a bunch of stacked squeezes. Overall, I want to see the Ready stay above 1760 at the bottom of these squeezes. I want to see a push back above these daily moving averages, which span about 1770 to 1776. Get back above 1780 and then start to recover 1790, 1800, and back up to the daily squeeze top. But if we can't get through 1780, we roll over and start to lose 1760, then it's likely back to 1750, 1740, recent lows, and a daily Keltner down. YM. So very different look, right? They are putting risk on, and NQ, they are not, putting risk on in YM. So YM down at the bottom of a daily squeeze. Overall today, I want to see YM hold up above 32,650. Start to reverse back above 32,800, which is kind of testing right now. If we can get back above 800 and 33,860, where the daily 200 sits, looking for YM to rally back up above 33,000 and start making this journey back up to daily moving averages above. It's had a good fade since last Friday's highs, back down to the daily squeeze bottom in this daily 200. Let's see if it can start to recover above and springboard off. Maybe get all sectors moving together to the upside going into the end of the week. And as NQ is getting up potentially to make a run for third Keltner again, you could start to say it's getting a little bit overbought. This one's maybe getting a little oversold, so we might start to see some rotation going in to the end of the month or the beginning of next month, right? We could see tech take a break. We could see YM see some rotation just to get back square and pull NQ back to the mean. Just talking more long term there. Moving on, Apple. Made it back to 170 yesterday and 171. Some key levels. Overall, it's all about trying to hold above those two. We do have some stacked squeezes there as well to provide some support. That span from about that 170 to almost 171. So as long as we can hold above those on Apple, we can start to reverse back up off of this daily 21, which sits right at 171. Get back up to the top of these squeezes near 172. Daily 15, daily 8, near 172.5, 172.75. So if we can clear above those, we'll fire these squeezes back up to the upside, give us some momentum to try to make it back up to 175. But if we start to lose 171 at 170, we'll fire these squeezes to the downside and likely get back to that first Keltner to the downside, 168.5. The second Keltner and the daily 50 down near 166. Just some targets should Apple start to give out. It's worth keeping an eye on Apple because it's going to drag tech with it. AMD up huge on NVIDIA's earnings and holding up well. So congrats to everybody who hit AMD and NVIDIA. A number of folks called it out in the room. Going to be some big trades. I want to see those percents today. I want to see those percent returns. As a number of you have joked, I set the bar on Netflix with some big percent returns. So I want to see what y'all get. But AMD opening up near 118, 120. And if you look at the overnight with your handy dandy trend tool, it's showing you that overnight low around 116, that overnight high 120. So that's the range. Play that range till it breaks. Lock up some profit at open. Don't be surprised for a dip to 116. 116 starts to give out. You might want to cut the rest of the position because they could be bringing it back to at least this recent high around 111. But if she can hold above 116, push through 120, sky's the limit. Basically, I'd be playing up to 122.5, 125 if we see a continuation push at open. Amazon's been holding up really well. Just dipped back to the daily 8 and bouncing and trying to make a push back up to that 118, 120. So we do have stacked squeezes from 117.5 up to 118.25-ish. So if we can get above 118, hold it and start to push through this recent high 118.75, we just might get up to that 120. That is where the third Keltner sits. So that's the overall target, and when we start to see some exhaustion on the daily. If we start to lose 116, 115 on Amazon, then it's likely down to test the daily 8 at 114.5. The squeeze bottoms at 114 down to 113. Should that give out, we'll fire these squeezes to the downside to get back to the daily 15 at 111.75 and the daily 21 at, we'll just call it 111. Google. I had this great run up to 126, a little fade back to the daily 8 where it just sat yesterday and held. And a gap up with tech, getting right back above this 121.5. And still pushing pre-market like it wants to get right back up to 125, 126. We do have a 4-hour squeeze that sits up at 126 to 126.5. So don't be surprised if we do get up here, hit this recent high, a 4-hour squeeze top, and then reverse back down. Overall, I want to see us try to hold above that 121.5. Closed around 121. So, with this trajectory that we're on, I wouldn't be surprised to see Google just push right up and hit this squeeze top, then do a little reverse, some rollback for a potential gap fill, maybe back to the overnight lows around 123 before continuing higher. Should 123 give out, then it's down to 121.5, 120, where that 4-hour squeeze bottom sits. Should we start to slip under 120 and yesterday's low, we'll be firing that 4-hour squeeze to the downside. It might give us momentum to carry down to 118.5, this first Keltner up, and then the daily 21 sits down near 115.3. Meta. Definitely got a wall of sellers up here, but pre-market we're trying to chew through them. Overall, Meta looks like it's ready to get through 250. This recent high of 253.5 to get up to that third Keltner at 255. And if it can push further, it's basically like 257.5, 260. But we do have some stacked squeeze tops. And if we can't get through 254, we could see a reversal back down to test 250. Overnight lows near 249, 248.5. Should we start to give those out, then it's back to yesterday's low and the daily 8 at 245-ish, where the bottom of the squeezes span from 240, we'll call it 244.5, down to 242. Microsoft. See, folks, this is why we track these moving averages. We have a big old push up on Microsoft. we see some profit taking, some selling back to the daily 8, daily 15, and yesterday we just held between them. This is what I mean when I say play the zone until it breaks. We open right in that area, peak above, and fail. And then it spent the day going from the daily 8 at 315 down to the daily 15 at 312, and then right back up. And now it's about to open at 321. So that's why we track these daily moving averages, and when we're in between them like this after a great run, it's worth taking the long for the ride right back up. I mean, that's how big money and institutions work. They're loading near these daily moving averages, which we just track because it's liquidity pockets, right? So they pushed away from that liquidity pocket, huge run. Now you take profit back to that liquidity pocket, you rinse and repeat right back up. This is how a bullish drive looks, right? Moving on, Netflix. So, Netflix, our baby. We were all over this run last week off of this daily 21. Again, pushed up away from moving averages, pulled back to them. We loaded on Tuesday and Wednesday, rode it out for the rest of the week for huge returns. And then what happens? It slowly fades back again to daily moving averages and gets a nice pop yesterday. That's why we track them. We always want to be ready. It didn't get to the daily 8 yesterday, but we know how they how a moving average steps up, right? And so yesterday, opened right at the daily 8 and got that great reaction. Overall today, this is actually a slight gap down. So they're not rotating into Netflix with the rest of tech, so we want to be a little patient. They might give another dip to this daily 8 today, so overall I want to see 355 hold. We're going to be opening near 361. We could easily just hold at like 360, 361 and keep pushing. But if there's a little dip, since it's a little bit of a weaker name on the gap, overall looking for that 355 to hold, that daily 8. Should that start to give out, then it's likely down to 350. We do have 353, then 350, and the daily 21 sits back down at 344. Just something to keep in mind. But if we can hold above this daily 50, 355, looking to push through some of these squeeze tops at 366, 367, to get back up to these recent highs, 375 and the 378 that we never quite made it to. And now the star of the show for today, NVIDIA. Huge reaction after earnings. Everyone in the room, pretty much everybody was on this. And, you know, if you didn't hit this trade, just chalk it off, right? Like, shrug it off. There are so many trades every day. There are so many earnings trades that happen throughout the year. You're not going to catch them all. And yes, we had a very good inclination that this was going up, and that's why we loaded long. But, you know, earnings can be a crapshoot. There's plenty of times where we have a good inclination, we have a good setup, and we try to take the long, and they dump it for no other reason than just to load it back up again at a better price. So, congrats to everybody hitting this. It looks like it's going to open at 400. We were all joking about it yesterday as we saw it tear through 350, tear through 370, 380. Looks like we're going to open near 400. Definitely take profit, folks, and I'm sure you will. But overall, I'm sure watch our fearless leader in NVIDIA is going to agree with me. Lock a good majority of your position and just leave runners for fun. Throw stops out there in case it starts to come back so that your huge return, it's still a huge return. Pretty easy, right? Lock up like half, lock up 75% of your position, and then leave a little in case it keeps going. But overall, we are through all-time high on the video, so sky's the limit. I had to watch 420. If it's really going to push on through 400 and get some strong push, like first 30 minutes, I'd target 420. We all know everyone loves 420, so. Overall, if we see a pullback 380 and 370, very key. Zone of support that should hold after this earnings gap up. Should that start to give out, it's basically every $10 increment. But they might pull it back. But we are past third Keltners. We are seeing a strong reaction of buyers, some continuation, trying to keep pushing. There's going to be a lot of volume in the video today. QQQ. Look at this, already setting a new high from last week, pre-market. Pulling up to this 339.3-ish key level. That's also where the third Keltner is sitting. If we can keep pushing through this, targets are 340, 341.5. But if we're going to reject this 339.3-ish and 340 and start to roll over, you want to target 338, 336.75, overnight lows around 336. Basically we'd like to see those overnight lows hold around 336 if we do have a little dip. We start to give out 336, it's probably back to 334, 333 little zone to test. And, we have yesterday's levels and that daily 8 below. But let's just see if this thing wants to keep on trucking. SPY. Pulling up to this 414. 414, 415, little zone that we need to get back above, hold it on any pullbacks to push back up to our levels above, right? We got to it on Tuesday and held, and so like I say, we want to see this hold. It did not hold, it slipped through and then rejected pre-market. Where do we go? The next zone. That's why I covered all of these key levels with you folks. That's why I don't have key levels at 412 and 415 or 16, right? These are the key zones that they push to, push away from to get back, and we're right back here at this 414. Overall, let's see if the structure that brought us up, the trend line from these lows, can hold. On any dips, basically want to see, about 413 hold on SPY. The daily 21 sits there below 413. We're going back to 412 for a test at the bottom of these squeezes. Should 412 not hold, then it's likely back to this zone below again, right? But if we can push above 414, 415, hold those on any pullbacks, then looking for a push back up to that 417.3, 418, 419, 419.5, back up at the daily squeeze top. Data's dropping, 8:30, so we'll see the reaction. As we move on to Tesla. Looks like not a big reaction to GDP, so the show continues to the upside. Tesla made it up to that 190, even peaked above to 193-ish, and then a fade back to what? Our daily moving averages, daily 8 and daily 50 were stacked pretty close to each other yesterday, around 178 to 179. I mean, again, folks, this is why we track these daily moving averages. What was it, last week? We were sitting down in them. I said, watch that 166, 167.5 key zone. I think they're loading long. And they loaded long, pushed off, gave it one last tap, and took right on off up to 180, up to 190. Then you see your profit taking back to what? Liquidity. Daily 50, daily 8. Nice bounce off of that yesterday and coming right back up. Overall, the overnight low is around 184.5. Would like to see that hold to push us through the overnight high around 188 to get back up to that 190, that 193. Maybe push up to 195, 200, and the daily 200, which sits near 200. But if we start to lose that 184.5, and if we see tech with some profit taking after such a run up and such a gap up, if we start to lose that 184.5, likely coming back to retest 182, kind of the last bounce point yesterday, and 180, where the daily 8 and daily 50 still sit, basically about 178.5 up to 179.5. If it does start to give out, then it's the daily 21, daily 15 below, right? Moving on to VIX, old Victor. So we got up to this daily squeeze top yesterday. And I kept saying, watch, basically the morning drive got us up to 20.72, then a pullback, then a little further, 20.81. So I said 7.2 to 8.1 is now resistance. When VIX gets there, get ready for a reversal. And we got that around 1 p.m. Drops down, can't get back, and we saw that good rally. End of day. But now VIX is drifting down near 19 overnight. Pre-market. So for further upside, would like to see VIX stay below 19.5. It's kind of near the highs from Tuesday, and it was support yesterday to push us up to 20.8. So if we can stay below 19.5, reject it on any pops on VIX, and roll over and lose 19, we can see further upside on the market, which should bring VIX, below 19 down to the daily 50 at 18.6, daily 8, 18.25, daily 21, 17.85, daily 15, 17.5. So if we can see the market push through its moving averages, which are sitting above, right? I said we got to get through those moving averages, hold them to push higher from that 41.65 back up to that 41.80, 41.90. So for the market to get above those daily moving averages, hold and push, we need to see VIX get below 19, reject and fall to these daily moving averages, right? But if we're going to see some pullbacks on this gap up, and maybe a market retest of that 41.36.5, we're likely going to see VIX get back up to 19.5, maybe even push to 20. Would really love to see it stay below 20 for upside on the market today. But if we're going to see further downside, maybe lose that 41.36.5, VIX will likely get through 20 and get back up to retest 20.5, 20.75, 21. So that's it for prep today. Hopefully this was helpful for everybody. It's a free Thursday. You can come on in and test out our tools. There's a link in the description of this video to join our Discord server for free. And every Thursday you can test out our system on your options charts. But I'm going to wrap up prep there. I'm going to get our tools out, update the sheet, and we're ready for the day. Thanks everybody for tuning in. Good luck today. Lock in the profit on chips. And we'll see everybody in the chat.